Hello, everyone. This is Chief Vleeschhouwer with Griffin Securities. Thank you for attending my DAC 2020 edition of the State of EDA Review from Wall Street, in which we will review the recent business results for EDA, as well as our expectations for this year and beyond. In my 2018 and 2019 presentations at DAC, I gave a positive view on the industry based on our review of the industry's results, our expectations at that time, and that continues to be our view. Since DAC 2019, the industry has continued to perform well in terms of its revenues in particular, its profitability, its cash flow, and this can certainly be seen in the evaluation of the two principal companies, Cadence and Synopsys, in terms of the performance of their stocks. And similarly, we have seen positive performance as well from Ansys, which is the fourth largest EDA company. Mentor is no longer publicly traded, but we've been able to discern that they, like Cadence, Synopsys, and Ansys, have continued to perform well, meaning that there continues to be good, broad performance in the EDA industry. And this, we think, remains one of the most important phenomena for the industry. In terms of the value of the industry, which for me as a financial analyst is ultimately an essential criterion, we have seen a considerable increase in the market value of Cadence and Synopsys. If we go back to DAC 2014, the combined market values of Cadence and Synopsys stock at that time was just over $11 billion. Since that time, just 5 years later, the market values of the two companies combined has just about quintupled. And that is recognition by investors of the important role that EDA plays in terms of its end markets, the improving revenues, bookings, profit margins, cash flow, and the overall quality of the businesses, the multiple product cycles that are underway, and of course the ongoing opportunity for new and emerging markets and product requirements such as 5G, autonomous vehicles, and many others that I'm sure we are now all quite familiar with. So for us, this has been a quite significant change in the market value of just these two companies alone. And we expect again that the appreciation potential continues based on our expectations for the business results for these two companies, and again for Ansys, as their EDA business comprises 1/4 of their total business. Here we see a 10-year history of revenues for EDA. TTM stands for trailing 12 months. This smooths out the quarterly effects, and clearly, as you can see, the industry has grown considerably over the last 10 years, now to well over $8 billion in 2019. And before too long, within the next 1 to 2 years, we expect this will be a roughly $9 billion industry. So again, EDA is continuing to perform quite well. Here we see a plot of EDA revenues by geography. The Americas remains, as you might expect, the largest market, but certainly one of the most important structural changes or mix changes that has occurred over the last decade or so has been the rise of Asia as an EDA market, and not just for EDA software and hardware, but also, as we can see in the industry data, it's become the second largest market for EDA IP after the Americas, and thus surpassing both Europe and Japan in that respect. As I noted, EDA grew well over the last year, 9% in 2019 to just over $8.2 billion. The long-term consolidation trend continues. The big two, Cadence and Synopsys, account for just about 2/3 of the industry. It wasn't that long ago, 10 years ago, where it was just over half. So through a combination of organic growth and certainly through a variety of acquisitions that Cadence and Synopsys have each made, their combined share now is about 2/3 of the industry. Mentor, by our derivation of their results since their acquisition by Siemens, has continued to grow well, and based on our interpretations from industry data, they have at least maintained their pre-acquisition share at around 19 to 20%. And then similarly, ANSYS continues to hold nearly 4% of EDA revenue. So the four combined, the big four, if you will, have nearly 90% of industry revenue. So by technology industry standards, that is considerable consolidation. For 2020, we are estimating that the industry will surpass 8.7 billion in revenues, so just about 5 to 6% growth. And that's based on a combination of core EDA software, hardware, and IP, both product and services. In terms of bookings, which are for us an essential input in terms of modeling and assessing the companies, here too we see parallel improvements. The big two bookings over $5 billion last year, up 8%. We expect a slight decline this year owing to the cyclicality of hardware, and that's the main reason there, plus the variability in IP. We would not expect a decline in core EDA software, which is the principal part of the business, of course. And by 2023, we expect 5.7 billion of total bookings for just Cadence and Synopsys alone. So again, we're looking for considerable organic growth of the business as measured by bookings. Profitability too, of course, as you can imagine, is quite an important metric for investors. And here also one of the most important trends over the last number of years, which we expect will continue, is the improving profit margin for the companies. As we can see, their combined operating income, nearly 28% of combined revenues last year, and we expect that will continue to grow in 2020, and by 2023, their combined operating income would be as much as 33% of estimated revenue. So a considerable improvement from 5, 10, 15, 20 years ago in terms of the profitability of the industry. One of my most important criteria for assessing EDA is what I've for a long time called my product mix matters theory of the industry. The point being that, as I'm sure you understand, there are dozens of categories of EDA software. Some are small in terms of revenue, some are larger, perhaps in a few hundred million, and then a number of categories that are quite large, such as, for example, PCB and place and route, synthesis, and so forth. Not all of those categories necessarily grow or grow at the same rate, and so one of the investment criteria is how well exposed a EDA company is or is not to the categories that are growing or might be expected to grow based on customers' technical requirements, hence product mix matters. And this theory does seem to work in terms of how to think about our companies. The positive over the last number of years is that there has in fact been broad growth in the industry. If we go back 20 years or so ago, and I may have mentioned this in prior presentations, the growth of the industry at that time was quite narrowly based. One or two product categories that at the time may have been doing well, but eventually that runs its course. Now though, for the last quite a few years, there has been broad growth across multiple categories. Again, not of equal duration or rate, but cumulatively, that's a good diversification of sources of growth. And each of the principal vendors has at least a couple, if not more, product lines that participate in these various categories. In addition to which, of course, the different companies maintain leadership in certain categories. Cadence in analog mixed signal, Synopsys with synthesis, for example, and ANSYS with its particular sign-off tools, for example, and Mentor, of course, with Caliber and PCB. And so this again is one of the important criteria for how to think about the industry. In addition to the aforementioned categories, I would also note another significant structural change in the mix of the industry, namely the growth of hardware-based revenues, or hardware-based verification revenues, which for Cadence and Synopsys were about 400 million last year, doubling from 2014. Now, these can be quite cyclical, of course, more so than software, but the underlying trend, nonetheless, is for considerable growth of the adoption of both emulation and prototyping by both semiconductor and systems customers. In addition, EDA IP has also grown as a significant source of business, more so for Synopsys than Cadence, but important for each, certainly, or increasingly important over the last number of years. And here we show that over the last year, the combined IP revenues for Cadence and Synopsys were $1.1 billion, as compared to just over 600 million 5 years ago, and nearly tripling from a decade ago. So that is a significant change in the composition of the revenues. Synopsys is the market leader, typically with 2.5 to 3 times the IP revenues for Cadence. But again, collectively, those businesses have been performing quite well for each company. And as I noted earlier, one of the markets in particular for Synopsys that has become quite important is Asia for IP. Here we show the various categories that have had ongoing growth over a trailing 12-month periods. And here you see that, for example, custom and implementation and others have had multiple periods of consecutive increases over quite a number of years. The right side of the table is empty because it turns out that in the latest data, there were no categories that had shown a decrease. And we have seen that before, we may see it again, but at least in the most recent data, there was not, in fact, such a decline. Thus, underscoring the interpretation of broad growth across the various categories. In terms of customer requirements and R&D, semiconductor R&D remains the largest source of business for EDA, though of course the systems customers, such as Apple and Microsoft and others, have become increasingly important EDA customers. But we do track semiconductor R&D quite closely as a critical source of funding for EDA. And as well, we also model R&D by the EDA companies themselves. There is a cycle here. The customers invest in EDA for their own product development purposes and strategies. In turn, by doing business with the EDA companies, of course, that enables the EDA companies to further reinvest in their businesses. And as with revenues, as with bookings, one of the parts of the business that has certainly grown as well quite significantly is the combined R&D for Cadence and Synopsys. Last year, they spent over $2 billion of combined R&D, representing 37% of revenue. I should note that some of that R&D by Synopsys does, of course, go to their software integrity business, but that's only about 10% of the total company. So we can assume that the vast majority of Synopsys R&D, and certainly for Cadence, is directly related to EDA. And here you can see the significant increases in R&D spending over the last number of years, and what we expect for 2020 to about $2.25 billion, and then to over $2.4 billion by 2023, thus supporting the advancement of their technology on a broad front, and thereby meeting the broad needs of the customers. Here we show a plot of Cadence and Synopsys R&D on a 15-year basis, 2008 to 2023. And as you can see as well, the percentage of revenue that goes into R&D. Here we show that same spending, but on a combined basis. So the up and to the right phenomenon for R&D is, of course, very important. This is at the heart of maintaining EDA technical competitiveness. And you'll see as well that the blue line, which represents percentage of revenue, is quite stable over an extended period of time in terms of percentage of revenue that does in fact go into to R&D. To get at the semiconductor spending by customers, we look at a composite of more than 25 semiconductor companies. that we think are highly representative of the industry. And again, we see continued growth in such spending. The combination was 45 billion last year. Intel accounts for about 30% of that. And for the 12 months ended first quarter 2020, the total was 45.5 billion, up about 3%. So still in the single-digit growth territory. And so this, we think, is sufficient to sustain ongoing bookings growth for the EDA companies. Here we show a plot over a 10+ year period. The upper line shows total spending. The lower line shows spending excluding Intel. So as you can see, the population of companies besides Intel has continued to increase its spending. This shows the relationship of EDA total revenue to R&D, semiconductor R&D. And while there are fluctuations, of course, the trend is still increasing over time. As you can see from this 10-year plot, the underlying relationship has continued to grow in terms of EDA revenues as a proportion of total semi-spend. And here, similarly, on a trailing 12-month basis, it's the same idea, where the percentage has continued to increase. Here we show a year-over-year plot of growth for EDA. If you go back 10+ years, there was a decline of R&D, then a substantial reacceleration in the years immediately after the recession of 08-09, and then it reverted more towards a more normal pattern in the lows to mid or even sometimes higher single digits, but positive throughout. Here we show the bookings for Ansys, Cadence, and Synopsys. Most recently, as you'll see, the Synopsys bookings have been quite strong, hence the upturn there. Similarly, the upturn for Cadence, and at a lower level, but still growing, are the Ansys bookings. This is mostly their Apache business that's reflected in this particular chart. And here is the combined number. So again, for an EDA investor, this would be a very positive chart showing the bookings trends for EDA. And in as much as book-to-bill is positive, that is to say, bookings are exceeding revenue, then backlog increases, and backlog gives you a form of future revenue visibility, which is also something, of course, that EDA investors, not to mention EDA managements, like to see. This is that same ratio, book-to-bill for Cadence and Synopsys over a 15-year period. Some of the noticeable spikes that you might see looking back, those would have been large multi-year renewals from Intel to Synopsys. But again, on the whole, you see a positive book-to-bill here, which supports the expectation of mid-single-digit or better growth for the EDA Big Two companies. Again, this is our dollar estimate for bookings. Again, some renewals-driven fluctuations over time, but still growing, as you can see. And here, the difference in these two lines is, therefore, the increases in backlog, which we expect will continue until 2023, which is as far out as our estimates currently go. This is Cadence. This is the Synopsys book-to-bill. Again, some fluctuations or spikes related to Intel, but still positive growth in recent years. This is combined revenues and income for the two companies. And then here's the profit margin for the two companies combined, something I mentioned earlier in my remarks, which is, again, one of the most important changes in the business profile of the EDA Big Two companies. Here we see that Cadence, however, has surpassed Synopsys in terms of their profit margin. Both are increasing, but Cadence has surpassed in terms of the absolute proportion. And that's largely a function of different mixes in their business. But again, we would expect that over time, each company would be able to sustain a better than 30% margin, which in historical terms would be quite an important change in the level of profitability. I mentioned earlier the rise of hardware. Here we see the plot for emulation and prototyping. Emulation typically quite a bit larger on a trailing 12-month basis. For individual companies like Synopsys, prototyping can on occasion be larger in a particular quarter, but on the whole, over the course of a year or many years, emulation such as Palladium and Zebu would typically be quite a bit larger than the prototyping hardware. And here we see the combination. A bit of cyclical decline in the last couple of quarters, but generally strong growth over the last 5 to 10 years. And we would expect this chart to look similar over the next number of years, with, of course, some quarterly or cyclical variations. IP, as I noted earlier, also a very important change in the business mix. Here we show Synopsys versus Cadence, and here we show the two together. So clearly there has been a considerable change in customers' willingness to purchase EDA IP as compared with 10 or 15 years ago. Finally, getting towards the end of the presentation, one of the things that we look at closely for all of our companies, not just EDA software, but certainly for the EDA companies themselves, is the open job positions that they're looking to fill. This we have found for all of our companies can be an important coincidental or leading indicator in terms of R&D capacity requirements, new product developments, even sales openings, services, and the like. So here we see the last 8 years of openings through the end of May 2020. Synopsys typically has the largest number of openings, as you might expect, being the largest company. So there's some fluctuation here over time, but again, we think this is a quite useful indicator of intermediate requirements for the companies. Here we show by region. This is the Americas, Asia, and Europe for all the companies combined. Here is the companies in the Americas only for R&D. So R&D always the largest number of openings for the companies, followed by applications engineers or AEs. Here's R&D for EMEA, which is typically the smallest by region as compared with the Americas or Asia. And then finally Asia, where Synopsys in particular has a very large number of openings on average until very recently. But the general history here is a very large number of openings in Asia, particularly for Synopsys. And I mentioned AEs, which are also a very important coincidental or leading indicator in terms of EDA support for its customers. And so here we see, for example, about 1.5 to 2 years ago, an upturn at Cadence, which was in no small part related to its ramp up for Intel. And then similarly, we've seen a ramp up at Synopsys, in no small part in their case related to the launch of a Fusion compiler, and just generally good business conditions which require more capacity of this kind. Here we show AEs as a percentage of total openings, so this is an indication of priority. So certainly you can see that for a good extended period, Cadence was growing its priority on AEs. Synopsys then followed suit in terms of its priority as a percentage of its total openings with respect to AEs. Turning to some of the individual companies, here's Ansys's bookings in their semiconductor and high-tech end markets. And by high-tech, they're also including the electronics customers, the systems customers. Here's our expectation for Cadence, revenue and income through 2023. Here's their recent segment performance. And similarly for Synopsys, our expectations through 23. I should note this includes their software integrity business, not only their EDA business. Here's Synopsys last few years for their segments. Here is their history over the last 15 plus years in revenues from Intel. The topping out there, starting around 2018 through the recent couple of quarters, mostly has to do with hardware. The core EDA software business from Intel to Synopsys has continued to grow, but we do see a cyclical effect here in terms of Intel's consumption of hardware, which will probably turn back up at some point, but this is the most recent effect of that cyclicality from Intel. That is my review of the industry. I hope you found it useful. I will be happy to take any questions now, and thank you again for your attention.